Hello everyone, I am Dr. Shilpa Agrawal Gupta, Assistant Professor, Department of Commerce, Bhopal School of Social Sciences. We all know that finance is the lifeline of any economy. And when we talk about finance, the image of bank emerges to our mind. So in this module, we are going to learn some topics related to bank, like bank deposit management, classification of accounts, deposit mobilization. Now let us start with the very first topic, that is deposit management. Deposit management involves the collection of adequate bank deposits required for the efficient and effective operation of banking business. It does not merely concern with the high volume but also with the low cost. So we can say that its stability is to produce competitive loans product. Means banks are not only the dealers in money but also the manufacturers of creating money. Similarly, deposit creation, it is an important function of commercial bank, because without deposit they cannot lend at all. When the bank receive cash from the customers, deposits are created. The deposits may be of different kind, like it can be current, saving or fixed. So depositor have to choose the type or the basis according to their needs, requirements like safety, convenience and earning interest. So in simple language, we can say that whatever we earn, we don't spend fully. We keep some amount for our future contingencies. As we know, future is totally uncertain. But if we keep all the savings at home, then there will be a risk of theft or burglary involved into it. So banks provide us the solution to this problem. We can open different types of account in the bank for different purposes. Like the classification of deposit accounts. So these are some of the accounts which we are going to study. The very first is saving account. As the name suggests, the saving account, it is opened by an individual or jointly by two persons with the aim to save money. Now, there is one more condition: any person who has attained the age of 18 years or having sound mental health can open the account. This account is majorly meant for individuals like students, housewives, pensioners or working professionals. Now let's talk about its features. As we have studied that the major or the main objective of saving account is to promote savings among people. Now withdrawals are also allowed subject to certain restrictions, and these restrictions may vary from bank to bank. The money can be withdrawn either by check, which is very common to us, and by withdrawal slip of the respective bank. Now withdrawal slip is a slip which is easily available on the bank counter, and you just fill the information like your account number, your name and the amount which you want to withdraw and deposit it on the cash counter, so that can be easily paid to you. The rate of interest payable is very nominal on saving account. At present, it is nearly 3 to 5% in India. One more feature of this account is that it is of continuing nature. There is no maximum period of holding. Until the customer wants himself to close the account can be continued. And some more conditions are there. One of them is like it should not be converted into the dormant account. It means if the transactions are not taking place for a long period of time, say for 12 to 24 months, then that account will be converted as the dormant account. Then the person again has to fulfill all the formalities and provide the KYC norms, then the account can be reopened. A minimum amount has to be kept on saving account to keep it functioning. No loan facility is provided against the saving account, which is available on some other types of accounts. And we all know ECS or e-banking are also available to pay the electricity bill, telephone bill or the routine household expenses which we people avail often. And the saving account holders, they are also provided with some ATM, debit, RuPay card if they want to, means they have to fill a separate form for asking for demanding for these kind of facilities. Now coming to the next is the current account. The second type of bank account is the current bank account. This account is not used for the purpose of saving. It is entirely different from the saving account. This type of bank account is mostly opened by businessmen, association, institution, religious institutions and other business related works. Now coming to the features of current account, the main objective of current account holders in opening these accounts is to enable them to conduct their business smoothly. Means whenever a person runs a business, he has to make many transactions in a day. If there would be any such restriction regarding the number of deposits or the withdrawals, so he won't be able to run his business smoothly. That's why this is the most suitable account for him. There is no fixed number of times that money can either be deposited or withdrawn from this account. Now, another important feature is overdraft facility. This is one of the most important feature of current account, that the overdraft facility is available on the account. Now let us understand this with the help of an example. Like if a person is having 1 lakh rupees in his account, but the need arises of rupees 1,20,000. Now he is not having sufficient balance of 20,000 more. Now what will happen? Now in this case, by considering the reputation of the customer and the status of the account, the bank provide a facility of overdraft. You can call it a loan, small loan also, but again subject to a certain restriction. Means there is a limit of overdraft prescribed by the bank. So he may avail 20,000 more on his existing account. There is no interest that is paid on such account. Now this is one of the very important point, that whenever we open an account, we always expect interest, but in this account interest is not at all paid. Zero interest account it is called as. So why the interest is not paid on this account? The reason being, the money, because there are continuous transactions going on in this account, so bank doesn't keep money for a longer period of time, and it doesn't get the opportunity to invest the money for earning income for the bank itself. That's why no interest is paid on this account. Now coming to next is the recurring deposit account. Recurring deposit account or RD account, this is also known as RD account, is the form of account where the account holder needs to deposit a fixed amount every month until it reaches the fixed maturity date. Now the features of recurring deposit account are: recurring deposit schemes aim to inculcate the regular habit of saving among the people. Since we have to deposit the amount, a fixed amount every month in the bank, therefore there means it inculcates the habit of regular deposition. Minimum amount that can be deposited, it varies from bank to bank. Means we can even start with rupees 100 and the limit goes on. The period of deposit is 6 months to 10 years. The rate of interest is comparatively higher than any other saving scheme. Again, the fundamental is the same, because the very first fundamental is to encourage the saving by the people, and the second is the rate of interest is comparatively high because the money which is kept in the account is for the longer period of time and in continuation. That's why it helps the bank in making the investment in other sectors. Another point of great importance, that is premature and mid-term withdrawals are not allowed in RDs. However, bank may allow to close if the need arises. So bank may allow to close the account before the maturity period, sometimes with a penalty for premature withdrawal. RD offers the additional benefit of loan. This is yet another important feature of this account, that you can easily avail loan on this account. and the loan which is granted to you, that estimates about 80 to 90% of the recurring amount. At the maturity, the amount is transferred in the saving or current account as per the instructions given by the customer. Now, the last type of account which we are going to study here is fixed deposit account. Money deposited in this account is accepted for a fixed period, means you can see the picture, even it is fixed, say 1, 2 or 5 years, which means the money so deposited cannot be withdrawn before the expiry of a fixed period. And one more thing to bring into your notice, that this deposit usually constitute more than half or up to 70% of the total bank deposits. Now, features of fixed deposit are as follows. The main purpose of fixed deposit account is to enable the individual to earn a higher rate of interest on their surplus fund, because whenever we think about FDs or the fixed deposit, so we deposit the money which is surplus to us, which is not in use. So we just want to earn some better rate of interest, that's why we go for fixed deposit account. The amount can be deposited only once. Since it is a fixed deposit account, the amount will be deposited once only. It is totally different from the recurring deposit, where you have to deposit the money on regular basis. For further such deposits, it means you cannot add amount to it. If you want to have some more amount to be added to the same, so you need to open another FD. The period of fixed deposit is 15 days to 10 years. Again, it varies from bank to bank. And the rate of interest, that may vary as per the amount and the period which the customer has chosen. Withdrawals are not allowed, as it happens same in RD. Withdrawals are not allowed. However, in case of emergency, banks allowed to close the fixed account prior to its maturity date. In such cases, bank deducts nearly 1% from the interest payable as on that date. The depositor is given a fixed deposit receipt, which depositor has to produce at the time of maturity. Means as you open the account, a receipt is provided to you. So when the maturity arrives, at that time you have to provide that slip to the bank as to get the maturity. The deposit can be renewed for further period. Now, coming to next is the deposit mobilization. Bank mobilize deposit as their primary source of fund. Having optimal deposit level, bank shall be able to lend the funds to generate interest on lending. In addition to lending, the deposit funds can be placed in certain investment avenues which suits the bank or deposit. Means, as we know that the prime function of the bank is to accept deposit and to grant loans. These loans are granted out of the deposits accumulated by the bank. And not only through loans, bank also invest in government securities and bonds with a view of earning something in the form of interest or profit. So that they could provide interest on their deposits and to meet out their expenses as well. So for all these, they are required to offer attractive interest rates and the facilities to the customers in order to attract them. So deposit mobilization is a continuous function for a bank to ensure the sum total of deposits at any time adequate to maintain the current level of lending and investment, especially to compensate the withdrawals made by the depositors. It means they also have to maintain the balance between the investment and the withdrawals. They have to keep certain cash reserve with them as to meet out the requirements of the withdrawals, because they cannot deny any of the withdrawal request. So this was all in this module. Thank you so much. Have a nice day.